It's time for Wise Money with Korhorn Financial Group with financial advisors Kevin Korhorn, Mike Bernard, and Josh Gregory.
Welcome to another episode of Wise Money with Korhorn Financial Group, where every week we're helping you take your next wise step in your financial life. My name's Mike Bernard. Thanks for being with us. I am your host. I am also one of the certified financial planners on the show. With me in the KFG studio, as always, certified financial planner Kevin Korhorn, but back, special guest, certified financial planner and CPA Ryan Fair.
Yeah, taxes can be very frustrating, especially if they're complicated or if you are unorganized. There are lots of different reasons why, or if you just don't understand it. But the changes, it can make it even worse, the new tax law changes. So today on Wise Money, we're going to review the top 7 promises you need to make to yourself so that this tax season will be your best ever.
Yep. We still have several tax-related questions from fans of the show. Thank you so much for submitting those. If you have them or you have something else going on in your financial life you want us to talk about or you need help with, reach out to us. You can find us online, wisemoneyradio.com. You can call or text 574-222-2000. It's 574-222-2000. Lastly, you can submit questions or just join the conversation on Facebook, YouTube, Twitter. Just search Wise Money Radio. All right. Well, Ryan's back. Thanks for being with us. Thanks for taking time out of. Is this a little busy?
No.
It's the heart of tax season, so we're glad you're in. Before we jump in,
you gotta say that right. It's the heart of tax season.
The heart of tax season.
Right, because it sounded like it's heart attack season, which if for Ryan it is heart attack season.
Oh,
but for us, we're in the heart
of tax season. Yes.
Nice.
Okay.
Nice.
So before we dive in, Ryan, give us a quick update and how's it going?
So yeah, we're off to a nice start. Everything is so far so good. Of course, it's still somewhat early. We still have some time to go, but we're on track and rolling right along. So far we haven't lost any of us hardworking employees from the heart attack season. But yeah, it's going well.
Most common issue or what would you encourage people maybe who haven't yet filed their return yet? What would you want to say to them?
I think it's just mostly planning ahead for 2019. At this, 18 is done. We're finding out the results of everybody's returns right now as we're doing them, and as much as anything, we're spending our time educating clients just to, let them know of any future 2019 expectations that they need to either adjust their expectations or adjust something else in their tax life to get their tax picture back in line with their current expectations.
You need a professional helping you. You need a CPA, someone who specializes in this, and then our belief is you need that person connected with your financial planner, your certified financial planner, so that there's synergy there. And so, I'll just be bold and say if you don't have a plan yet to get your tax return done, then give us a call.
Give us a call.
We'd love to help. There's still room in Ryan's calendar. There's several ways that you can that KFG can help prepare your taxes. You can sit down with Ryan or one of our specialists and have your return done right there face to face. Ask all your questions, have them ask you questions, and get it knocked out there just with an appointment. If you're busy, as most people are, you can just drop your information off as well. We can prepare your return and then call you when it's done, and then you'll sit down with someone to review your return, make sure that you answer those 3 questions that I always tell you about. And then the last way is my favorite way. You drop them off, and then you have a meeting with a certified financial planner. And the certified financial planner is going to review the return with you, answer all 3 of those questions. So do we know where every number came from? Do we know it's accurate? And then what opportunities exist for you to improve this return, make this return better? And then what opportunities exist for you to make next year better? How is 2019 going to change? What adjustments do you need to make? And then they're going to fit all of that into your overall financial life. So give us a call. If you're already working with someone and you don't have an appointment scheduled, give them a call and get rolling on this stuff. I don't know what it is, but taxes is very easy to procrastinate. So I would say get moving.
Mm-hmm.
Yes, and as someone who doesn't prepare them, they're very easy to prepare. But I do think one of the interesting things this year is with the small business owners and seeing the qualified business income deduction, which the QBID is a new acronym that we have around here. And if you are a small business owner and you've been procrastinating, or you've self-prepared in the past, you're going to need to fill out a worksheet to calculate what your qualified business income deduction is. And so you're likely going to want some help with that. If I said QBID and it didn't ring a bell, you're going to want some help. Get some help. We can help you. We specialize in that.
Yeah, you lost me at worksheet. So that's it. So near the beginning of the year, Kevin shared with me an article he found on the Wall Street Journal written by Laura Saunders, about 7 New Year's tax resolutions. Well, we're into the year, so we're not going to talk about resolutions. However, it did inspire us. And I thought, well, with the new tax laws, yeah, what are some promises? What are some pledges as you're going into this tax season? What do you just need to say? All right, I solemnly swear not to do this. And there's actually a few. I came up with the top 7. So we'll get Ryan's take on each of these. So the first promise, the first pledge that you need to make to yourself regarding this year's taxes is, I promise not to get upset with my let's start over. I promise not to get upset that my refund is down or that I owe if I did not double check my withholdings during the year.
Tax planning.
Yes.
So we hit it all the time. This is why you take a look at stuff during the year. So as we've hit on a number of times here at Core Financial Group, we've done lots of tax planning in the last 4 or 5 months of the prior year. We're cranking tax returns. Everybody makes these really funny jokes of, oh, tax season's over, you're probably not working anymore. Right, Kevin? I've heard that from Kevin more than anybody else.
Oh, yeah.
But
Ryan's a seasonal employee.
Yeah. So we're cranking out tax projections, which are basic. I mean, it's a mock tax return. We're doing mock tax returns the rest of the year for the upcoming season, so we know what to expect.
Yeah. If you're a fan of the Wise Money Show or even listen periodically, you've probably heard us. We've been warning you about this one. And so, yeah, I empathize, but you got to promise not to get upset if your refund's different because of your withholdings and you just never checked your withholdings. Quick story. One of my friends I grew up with, we were really, really close, and his name was Chris. And when we graduated Michigan State together, he went to work for a big CPA firm in Chicago. And he's a CPA. And he gets his taxes done his first year out of school. Has no money, and he's got a good job, but he has no money. Bam, you owe $9,000. Oh. Totally freaked out. Oh, my goodness, something's got to be wrong. He wasn't having anything withheld for taxes. A CPA never even looked at his own pay stub to see, are they withholding anything, let alone the right amount.
Imagine there's some sort of Michigan State joke in there, but we'll skip it.
Nope.
No, but this is where you would assume, and you know what they say about assumptions. I mean, it gets everyone in trouble. But you assume a CPA working at a CPA firm that's an impossible mistake to make. No, it's not an impossible mistake to make.
But here's the other thing. It wasn't him that made the mistake. It's just the buck stops with him. He's responsible for checking it. He went back and looked at his W-4. No, I filled it out correctly. Payroll made the mistake. Doesn't matter. Mm-hmm. And we see this all the time, let alone these tax withholding changes or not. You might have kept everything the same. Your payroll department might have done something incorrect. But it's still on you to double check.
Right.
Yeah, in that scenario, payroll is on the hook for an apology, and you are on the hook for writing the check.
I know this is confusing. Let me just make the point. I mean, your taxes are calculated on your tax return. That's the amount of tax that you owe. A lot of times we just pay that. The IRS wants us to pay it throughout the year through withholdings or estimates, but that's where it all gets trued up. And so even if you're just getting paid, you work a normal job, and it's just W-2 income, all that sort of stuff, you can't just rely on, someone else is taking care of it for me. No, you're responsible for it. This year, again, we've just told you time and again that with these new tax law changes, the IRS came out in early February with just a quick assumption, hey, here's how we think withholding should change. I think they got it wrong. I think they got it wrong. So it's going to be different. I'll state again, likely, the new tax laws means you're paying less tax. It's just also very likely you've had less withheld and your refund or what you owe is going to be different. So that's the first promise. We've got 6 more to hit coming up here on Wise Money with Korhorn Financial Group. All right. Yeah, that's a true story. True story. I don't know if you should say those names, but it was Crow. So he worked for Crow, and you. So, yeah, I don't know. And by the way, he went to Central and then transferred to Michigan State. That's where.
Well, I understand that. I was, they always say Central's a party school, but for some people, it's not a big enough party school. So they're not satisfied, so they go to Michigan State.
Yeah. Okay, and then just to loop it in, since we don't have anything else to talk about. So I moved down here for the job, not the internship. I moved down for the job, and it's still in the summer, so I'm still, maybe in my first month here. And I'm at the Indian Lakes Apartments, windows open. I assume I didn't have air conditioning. Maybe I did. I don't know. Windows open. And I hear people walking around, and I recognize that voice. Who is that? And I run to the window, and I look, and I'm like, oh my goodness, that looks just like a girl that I went to high school with, but that's 2 hours away. And it was Katie Hogan, who she and I from kindergarten on up were in the same class. And my friend Chris ended up marrying Katie Hogan 4 years later.
Really?
Yeah. So small world in that I saw her. Small world in that they were friends, but they never met. So she went to Notre Dame. She went to Notre Dame Law, and then moved back to Grand Rapids. And right as he was moving from Chicago back to Grand Rapids, because that's what people do. They go to Chicago and then they go home. And now they're married. Couple kids.
Have you met her dad?
The Hulk?
Yeah. Blonde, long blonde hair. Okay. Let's rock it out.
All right.
Wow.
We're going into segment 2.
What are the most important pledges or promises you need to make with yourself, to yourself, when getting your taxes done this year? We're running through those. So glad to have you with us. This is Wise Money with Korhorn Financial Group. My name is Mike Bernard. Here with me in the KFG studios, Kevin Korhorn, and special guest, CFP CPA Ryan Fair. Thank you to the attorneys at Ladue, Kern, and Keene, as well as First State Bank for making the Wise Money Show possible. Thank you very much. If you have questions relating to taxes, it's tax season, so we're getting a lot of those, or about the markets, what's the craziness going on there, or anything else in your financial life, reach out to us. We'd love to help. 574-222-2000. You can call or text us at 574-222-2000. Online, wisemoneyradio.com. You can submit questions right there on the right. You can even catch up on previous episodes. Speaking of previous episodes, every show is on the YouTube channel. You can subscribe to that. You can watch the show there. You can even submit questions that way. So Facebook, YouTube, Twitter, you can connect with the show that way as well. All right, so we're talking about the 7 pledges or promises that you just need to commit to right now. Hey, I will or I won't, based on this year's taxes. So the very first one is you're not going to cry over the spilt milk. You are not going to get upset if your refund is different or if you owe, if you never checked your withholdings during the year. You're not going to do it, okay? The second one, I promise to not panic about the new SALT deduction limit on state and local taxes. What in the world is that? Does that even mean, Ryan?
All right, SALT. We like acronyms. So state and local tax, SALT. And so on Schedule A, itemized deductions, when you're filing your taxes, one of the deductions that you get is for all of the state and local income taxes that you paid in during the year. And so that's typically, your state and county withholdings that you see on your paychecks or through your retirement distributions, estimated taxes that you pay to the state and local. And then you also, in that whole section of Schedule A, you get to deduct your state and local taxes as well as your property taxes on your, basically any residence that you own that's not a business, rental or anything like that. But your property taxes, state and local taxes, and then like your excise taxes and stuff on vehicle license plate registrations. all of that stuff in prior years, you could add up and deduct all of it as an itemized deduction. This year, they put a cap on that entire tax section where you can only deduct up to $10,000. So it doesn't take many people in the middle class on up to hit that $10,000 limit. You can run through some quick examples of if, there's a husband and wife that make 150,000 here in St. Joe County, and you're paying, basically 5% state and local tax. So that's $7,500. Yeah. Mm-hmm. And then you add your property taxes on top of that.
Yeah.
$2,500 is a nice home where the property taxes, basically from that point on up, you don't get any extra deductions. If you're making 200, 250, whatever, you're going to hit that cap pretty quick. We're fortunate here in the Midwest where we're located that we have reasonable property tax rates, reasonable income tax rates. Where the big scuffle of this whole thing is on the coasts of the countries of the United States. So you move out to New York, California, some of these other areas, it's not totally unheard of for property taxes to be 10 grand, let alone, obviously wages are higher in those high cost of living areas,
and the
tax
taxes
rates are significantly higher. So again, some California clients that I have, they're paying upwards of 9% for their state income tax rate, and 10 grand doesn't go very far when you're talking those kind of numbers.
If you have a house here and you also have a house in Florida, right? You used to be able to deduct. Those are both residences. You used to be able to, don't. So it could impact it.
And we talked about the coast, but don't leave out Illinois.
Yeah,
right.
Yeah.
Come on now.
Both of them. Yeah.
No, but I have a good friend who pays $25,000. He lives in Chicago, and Shazam, of the $25,000 that he used to deduct on his return, he gets to take 10 of that, which says nothing about his income or any of that stuff. So I mean, there's a pretty decent haircut for the right person or the wrong person, depending on how you look at it.
So it's a change, and you promise not to panic. That on how that change is gonna impact you. You can go ahead. You can say it's unfair and all that sort of stuff, but it is what it is. So, all right. Promise number 3. I promise to not get mad at my tax preparer because I no longer receive an exemption deduction. Now, I usually look for every opportunity to get mad at Ryan, but you've got to promise that you're not going to get mad because you no longer receive a personal exemption deduction.
Well, you can get mad, just don't get mad at Ryan.
Oh, okay.
Right.
Right.
So what does that mean?
So yeah, this should have been rule number 1, Mike. I'm a little bit ticked. Rule number
Don't get
1:
mad at the host.
don't get mad at Ryan. So yeah, the exemptions are gone this year, and so years past, you got a $4,050 deduction last year for every dependent in your household. Those are totally gone.
And for being you.
Right.
That's right.
If you just showed up, you got a coupon for being you, and you could deduct that $4,050 from the amount of income that you would pay tax on.
So you used to, maybe if you itemized and maybe got 25,000 of itemized deductions, and then you get all these other deductions for you and your spouse and anyone else in your family, and that the deduction is just gone.
It's gone. So Congress included a bunch of other changes to help offset this elimination of exemptions. The one that Mike just hit on is the standard deduction. So standard deduction basically doubled for everybody from 17 to 18. And so I'm sorry, 2017 to 2018. For a married filing jointly couple, the deduction went from $12,700 up to $24,000 for this 2018 year. So I saw Kevin, you were getting ready to correct me. So
No. I mean, but doubling from 17 to 18, I'm like, okay.
So,
Not a math
but
major,
I think where people they'll be irritated when they look at 17 to 18 and they say, oh my goodness, I was getting a $16,000 deduction for my normal family of myself, my spouse, and my 2 kids. And then now that's gone. But the other one is, claiming the kids. Claiming the kids. There's, and I've got 3 kiddos running around my house, and I don't know why, but they're so stinking expensive, but it feels good when you get tax write-offs for them.
Yep.
But that tax write-off is gone.
But so Congress took that into account so those 3 kiddos you have running around last year, Congress or the government gave you $1,000 for each of them that were running around. It's called child tax credit.
Yep.
So that's awesome. This year, 2018 is even more awesome. They doubled that up to $2,000 per kid. The other thing is last year and prior years, the number of people that were allowed to take that child tax credit, basically once your income for a married couple got above, I think around 110,000, they started reducing that $1,000 child tax credit that you got. This year, they blew that out of the water, and you can get the full $2,000 child tax credit as long as your income is under $400,000.
Yeah.
So, Mike's example: if we had a client that was making $150,000 and had 3 kids, last year they would get almost nothing out of that child tax credit. This year, 3 kids making $150,000, they get $6,000 of child tax credit, and this is a credit, which is better than a deduction. It's a dollar for dollar credit to reduce your taxes.
Now, when we're talking about child, the rule is still that you've got to be younger than 17,
Right.
which I know a whole bunch of kids that are 17 and 18. A
Yep.
whole bunch, but sorry, that's where they drew the line. But they also added something else, Ryan.
Yes, they did. So there's something called a family tax credit. So what Mike was saying, years past, the child tax credit's always stopped in the year that the kid turned 17. That's still the case for the new credit, but they added a new family tax credit for $500 for every other dependent that doesn't qualify as a qualifying child for that child tax credit. So you've got the kids going to school still, 17, 18, on into high school, or if there's circumstances where you're claiming a parent or someone else as a dependent of you, you can probably, or you will qualify for that family tax credit for $500, which has never been around in years past.
Yeah. A few weeks ago, we talked about the dangers of filing your own tax return. I mean, this is another one. This is such a big change with meaningful dollars. Tax credits are dollar for dollar back in your pocket and reduction of tax. And you just don't want to take this lightly. You want to make sure you're getting everything possible. All right, promises 4 through 7, as well as additional questions coming up here on Wise Money with Korhorn Financial Group. Good stuff. Good stuff.
Yeah,
2
so
segments in.
so if you itemize and you lost your so I think about in my situation, Josh is gone, and so it doesn't matter that I have one less exemption because he's not a dependent
Right.
anymore, which is good. There's an offset there. I'll take that amazing tax benefit that I had for claiming him as an exemption and trade it for the dollars
know.
that I'm not spending.
Yep. Yep. All right. Well, starting segment 3, but on the outline, starting segment 2.
So just a little humble brag. He took a picture and sent it his MyPay site, and he's saving. He moved his savings from 50 to 60% into the Roth part of the TSP, and then he gets special pay because he's in South Korea, and he set that at 65.
That's awesome.
So he is a man on a mission.
That is.
Yeah. And I'm telling you, it is going to set the table for, because when I was in, we had this thing, this guy came and we signed up and they took money out of our pay every month. And I've never been able to track down what that was. So I'm sure I have something in California unclaimed with some money. But if they had a slick system like they have now, to take money right out of your pay and invest it.
There are niche advisors who just serve military.
Yeah.
I wonder about Josh. I mean, with that intensity and that focus, I don't know what God has in store for him, in the long term. But I mean, he's walking the walk and he's doing it. How many people in his barracks, if they call that if that's what they call it over there, would say, you can't do that. That's impossible. I can't, because I got to go party. I got to have a social life. I got to do these other things.
Right.
And he's just doing it.
Yeah. Yeah, he's my 110% man. So whatever he decides, look out.
Yeah, that's awesome.
That's what I want in my military.
Yeah,
Yep.
you betcha.
All right.
Segment 3.
Segment 3. Thank you so much for joining us today. This is Wise Money with Korhorn Financial Group. My name is Mike Bernard. Here with me in the KFG studios, Kevin Korhorn, and special guest, CFP CPA Ryan Fair. Thank you, Bethel College Adult and Graduate Studies, as well as Diane Bennett with REMAX 100 for partnering with us on the Wise Money Show. Thank you very much. So far, we've been talking about the top 7 promises, top 7 pledges that you need to make to yourself when you're preparing or getting your taxes done this year. We're through the first 3. We're going to rattle off 4 through 7 here in just a second. If you have any questions, reach out to us, 574-222-2000. You can call or text 574-222-2000. You can find us online, wisemoneyradio.com, and then once again, all over social media, just search Wise Money Radio, Facebook, YouTube, Twitter. That is how you can join the conversation. All right, so with so much changed, with taxes being so frustrating and emotional, we're just going to challenge you. Just commit. Just make some pledges. Make some promises with yourself. The very first one, I'll just review what we've covered so far. The very first one is promise not to get upset if your refund is different or if you owe, if you never checked your withholdings throughout the year. We've been telling you to do that, so it might be frustrated, but if you didn't check them, then that's what it is. Promise not to panic over the new SALT limits in your itemized deduction. And then lastly, Ryan's favorite, number 3, promise not to get mad at my tax preparer because I can no longer receive an exemption deduction. Find another reason to get mad at Ryan.
So, tie back to the show that we did a couple of weeks ago. If you are self-preparing your return, you can get angry at your tax preparer.
Oh, there you go. That's right. That's right. Promise number 4, I pledge to not blindly take the standard deduction, but rather will still confirm which option is best for me. I actually think this is a big risk. There's so much talk about, hey, standard deduction now is doubling, and so I think a lot of people will just say, oh, well, I guess, they might even think, this is so complicated, they might just think, well, I can't itemize anymore. No, you totally can. You totally can. You still need to confirm it. Even for folks when we've done projections and it looks, yeah, it's going to be pretty close, but you'll probably get the standard deduction. I'm still telling them, track all your stuff, bring it in, because I want to look. I want to make sure.
Yep. Yeah, for 18 and 19, I'm telling people just keep going with it. Let's get a couple years under our belt and see what reality is under the new law. There's going to be, a handful of people where it's just, completely obvious. If the last 5 years their total itemized deductions have been, $5,000, they're not going to get to $24,000. That's kind of the exception. But if you're in the hunt or in the ballpark, I encourage you to keep the same process you've done the last few years and round up all those expenses for us at tax time. We're going to do it both ways so that we can prove to you which way is the best way.
Did you say round up?
That's what we do.
You mean
it's all a rounding game?
He means gather. Here's something else I would tell you. If you're real close, to itemizing, if you don't have a certified financial planner and you're not doing comprehensive financial planning and you're close, you need to work with your certified financial planner because there's now additional planning strategies that you need to consider to go maybe on again, off again, where 1 year you're doing things just a little bit differently so you can itemize, and then the next year you're going to take the standard deduction, and then the following year you'll itemize again. And so you need to, that's the creativity. We talk all the time about clarity, confidence, and creativity. That's the creativity that your certified financial planner should bring as long as they are doing tax planning with you.
Yeah, and I think of a situation, we serve lots of older folks, and I can say older folks because I'm one of them now. But we serve these folks, and it's not uncommon where they'll have a year where they'll have $20,000 or $30,000 of dental work done.
Yeah.
Because they're basically redoing the grill and fixing, crowns and this and that and the other thing. And some, they'll say, hey, I have a bunch of dental work I'm going to get done. I'm going to do some of it this year and some of it next year and some of it. And sometimes it just makes sense to do it all this year because the older folks, their standard deduction is
26.6.
26.6. So 26.6. Well, hey, here you go. It might make sense instead of spreading that over a few years to fill that all into 1 year.
Yeah.
I had to fill it all in. I get it. Hey, I had this a really important conversation at the end of 18 with a client. It was tax planning because, believe it or not, 2019 the medical itemized deduction limit goes back up to 10%. So 18, it's still at 7.5% of your adjusted gross income. 19, it goes up to 10%. So he was trying to figure out what year it would make the most sense to pay the dental or the medical expenses. It was a big planning opportunity.
You need professionals in your life. You need a team, a squad that you can work with on that. All right, promise number 5. I promise to bring my CPA a shoebox full of documents and receipts on April 14th. Will you commit to doing that? I'm just kidding.
Again, if you're self-preparing, that's a great idea.
No, I promise not to bring my CPA a shoebox full of documents and receipts on April 14th. When is the filing deadline this year, Ryan? Is it still the 15th, or they change this every year?
Yeah, it changes every year. I'm so buried right now in getting done now what I have to get done.
We'll look it up for you, but I'm pretty sure it's the 15th. So we get people, again, we serve almost 3,000 households in the area on tax preparation, and the shoebox and the Martin's bag full of receipts we still get, but if you're not itemizing, that's probably going to be less and less.
Yeah.
So
we get a lot of those people that have they donate $5 to every local charity in town, and those aren't going to most likely add up enough to itemize. The medical expenses we talked about. There's tons of receipts related to that stuff. Yeah. So we encourage you to sit down and do some math.
Here's what I do. I just take a picture of all that stuff and I put it in my tax folder.
Yep.
And so I have a digital tax folder. I just take a picture and I just save that stuff there. And then when it's time to get my return done, I just share that folder with Ryan. And so he's got everything right there. And
we've got a pretty sweet new software program too that we use that can help compile those receipts throughout the year, and you can add them up and put them in a spreadsheet, and it's pretty sweet.
Awesome.
Yeah, I'm going to say it's April 15th.
Yep.
It is April 15th.
Sometimes
it's after, it's because on a Monday or Tuesday. So.
Right, it's on a Monday, and because it used to be April 15th, and there was some holiday.
Emancipation Day.
Yep. So that was being celebrated, so it pushed the filing deadline back a day or two, but now it's Monday, April 15th.
I do remember looking at that because I remember that's another weekend that I get to work at the office.
2 more promises.
Yes.
Let me sneak them in here. So promise number 6. I can't sneak this one in. This is a big one. If I own a small business or a rental property, I will be diligent in learning how the new qualified business income deduction can help me and how I can maximize it.
Yeah, this is the biggest tax deduction that small businesses have seen in years, maybe ever.
Yeah.
I mean, it's huge. And with that hugeness comes huge complications.
You've got to pay yourself a certain amount. Your other income needs to be a certain amount. I mean, there's all these kind of rings of fire that you need to jump through and, bounce on one leg while tapping the top of your head and rubbing your
Work
belly.
in the right industry.
Yeah. So if you own a small business, if you're self-employed, if you have rental income, you promise you'll be diligent about learning about how in the world does this thing work, or hopefully working with a professional who's already learned it. And then some people, I think, Ryan, are going to get up and they're going to find out that they didn't get the full 20% deduction. And there might be some adjustments that you need to make to your payroll or to your whatever to make sure you get the full amount for 2019. Is that right?
Yep, absolutely. Yeah, there's so many moving parts to this. Usually for the higher income, the businesses that have qualified business income, or it's actually taxable income over $315,000 for a married couple, that's where it gets really, really complicated. But yeah, there's so many moving parts in that calculation that you need to make sure you understand it.
Yeah, just to clarify, I mean, this was made law in December of
Right.
17. The IRS didn't even really publish anything until September
Yep,
of 18.
Yep.
They didn't even want to stick their neck out and say, this is how it works.
And then when they did release something that said how it works, I think it was like 800 pages of their
incredible.
explanation. It's crazy.
Promise number 7 is coming up, and I'll just a little teaser. It is the most important. After that, we've got a couple great questions. One from Derek, who is a small business owner, owns an S corp, and I'm curious about how this thing will work in his situation. So, still a lot more to hit here on Wise Money with Korhorn Financial Group. All right.
Okay, so how many planes can you land at one time?
Ooh, I think the answer is all of them. I'm going to go with Casey's answer. It's all of them.
The answer is 1.
In the entire United States.
Yes.
Just kidding.
You can only land one.
Yes. You can only land
Oh,
1.
really?
Yeah. The answer is 1.
I can't land any, so if that's
Where in the
Really?
world did that come from?
Your mother phoned in. So I think
My
it's
mom.
important. I think it's important to remember that. And I do. I think you have to say before we hit the pledge, promise, oath program number 7. If you're listening to this and you have not organized your stuff and gotten it in, do it now. Don't wait. For the latent perfectionists out there that are procrastinating because they want to do it perfectly, it's not going to be perfect. Grab it and go.
Hey, Ryan, I'm going to have Kevin, will you say that? Because on March 2nd, I want you to hear your own voice giving that encouragement. Don't wait. Get your stuff in. Let's
Do you
go.
want me to hear it?
Yes, I'm teasing you.
This is advice for someone else, Mike.
I'm teasing you. Yeah, let's hit that, and then we'll hit number 7, and then at least hit Derek's question.
Yeah.
All right.
Cito? Hey, sniffer.
You're putting. Skins game.
Put that putter away, Casey. Let's get going.
Oh boy. Yeah. Check your phones. Uh-oh.
Perfect. Let's keep it that way.
Casey is the guy that we try to not put.
You should stop saying things that are not true, Kevin.
We do not want him.
That's all I'm saying. Oh, go ahead and tell everybody on YouTube what I just said.
Oh my! So I'm actually gonna.
Do what?
Okay, Casey
That's great.
Casey just sent us the calf that was born with 3 eyes and 14 legs. So yes, Casey sent us proof that you can land 2 planes at one time, based on a mid-air collision. One pilot landed 2 planes at one time. So I sit.
Very good.
I sit corrected.
The benefits of having an a-hole like me in the building.
Okay.
Now we can finish.
We've got lots of them. Okay, here we go.
Thank you so much for being with us today. This is Wise Money with Korhorn Financial Group, coming to you from the KFG studios. My name's Mike Bernard. Here with me, Kevin Korhorn, and special guest, CPA and CFP Ryan Fair. If you missed anything, there's several ways you can catch up on today's show and all previous. You can follow the show and watch it on YouTube. So we've got a YouTube channel. Just search Wise Money Radio. You can be with us in the studio, and we press record when we start airing, and that's what you see. Every episode's also on podcast. Wherever you listen to podcasts, just search Wise Money with Korhorn Financial Group. That's Korhorn with a K. Subscribe to that. You can binge listen if you want. If you've got a long distance travel or just at the office, you can do that Also at the office or in front of your computer, you can catch every episode right there on wisemoneyradio.com. And we've got a media player right there. You can listen that way as well. Can also submit questions that way also. So far in the program, we've been talking about the different pledges, promises you need to make to yourself to not freak out or to handle the changes with taxes this year in the most appropriate way. One other, just kind of to go a little a public service announcement. If you are listening to this right now, it's early March. There's still time. But if you don't have your tax documents organized, if you don't have a game plan, and you're not taking action to get your return filed timely and get things set up, take action now.
Please.
Take action now. Yes. Don't wait till the last minute. I was joking earlier about reaching out to Ryan on April 14th. Nope. Take action now because there's still planning opportunities that you can likely do before April 15. You want to figure those out. And if you're scrambling at the last minute or you might file an extension. That's fine. Hopefully you've done planning ahead of that. But if you haven't yet organized your stuff, if you haven't yet taken some action to get your return done, do that now.
Yeah, grab your stuff. It's not yet 10 o'clock. Grab your stuff and head over to our Granger office. It's open until noon. And we have 3 other offices throughout the area to conveniently serve you in Niles, Coons Lake, and Napanee.
That's right. All right.
One of the cities with each letter used twice in its name.
Napanee?
Yes.
Mississippi? No, never. All right. So the last promise pledge number 7 is the most important. I pledge to continue to review my return with my tax preparer or financial planner for errors and opportunities before filing it.
Yep, I agree with this one. That's part of our process that's just part of our process for doing tax returns. We do lots of face-to-face appointments. In those appointments, part of our, wrapping up final process is we go through the return line by line and explain where everything came from, and make sure that we got everything and talk through it with the clients. Also, Mike talked about the clients that we have just drop off their tax returns. If we've done their taxes for a number of years, a lot of people will just send it in to us electronically or drop it off at one of the offices. We prepare the return and call the client when it's done, or somehow let them know when it's done. And whenever they stop in to pick up the return, we grab it, the receptionist grabs it, and we offer to have them meet with a financial advisor or tax preparer to review the return with them. Even if they're just swinging in to pick it up, we'll do a 5-minute review and again, just go through and make sure that everybody's on the same page. And
Susie and Debbie, they're just really sweet, and you're busy, you're running in, and you've received some communication. Hey, your return's done, and they're always sweet and kind to say, "I'd like to have someone come up and review this with you." Why? Because out of our experience, every time you get your return done, you need to answer 3 questions. You're going to be sick of me saying this. The very first one is you need to know where every number came from and make sure you've got an accurate return. Any financial professional that's helping you needs to go through that with you. And I know it's tedious. They don't need to make it tedious. It's not going to be 9 hours. They can do it very efficiently. Yeah. But you need a double check. You do, because you might realize, oh, no, that's not right. I forgot to give you a form. Oh, my goodness. I can't believe I did that. So you need to make sure that every number is right and that you've got an accurate return. And then second is this other one, which is before you file, you need to look at ways that you can improve your taxes this year. Yes. You need to do that. And then the third question, for those of you that haven't heard me preach on this before, is you then need to take a look and say, how will 2019 be different? How will this upcoming year be different? And what should I be doing about it?
Yeah, did my tax return meet my expectations? And if so, great, and I know where every number came from, and it looks right to me. And if not, why didn't it? I mean, our least favorite thing is surprises during tax season, but it's not uncommon to be surprised. Mm-hmm. And we talked about some of these things that cause surprises. You estimated your income incorrectly and with the Affordable Care Act, or there's all kinds of different things where you say, wait a minute, I'm surprised that this happened. You want to know why.
Yep. All right. So those are the pledges that you're making to yourself, the promises that you're making to yourself. And hopefully that helps you have the best tax year ever. All right, let's transition into a couple questions here. Derek is 53. He's from Mishawaka, and here's what he asked. I own a small S-Corp with just 5 employees. We had approximately $200,000 of profit in 2018, which is our best year ever. That's great. Way to go, Derek and the team. How does the new tax law change affect the tax that I have to pay on that profit? It gets a little technical here.
Yeah, so there's lots of ways that the new tax law affects how much tax you're going to pay on that. And the first one, the easiest one I would say, is the actual tax rates decreased across the board for every taxpayer. The percentage of tax or percentage that you're paying on the profit is going down for everybody across the board, which is a win. The other big thing that we've talked about, part of the acronyms and stuff that Kevin was talking about, was QBI or QBID. That's qualified business income deduction. And depending on other scenarios or other cases in your life, Derek, depends what your total household taxable income is. But most likely, your small business is going to have a 20% deduction of that business profit. Do the quick math on that. That's a $40,000 deduction on your tax return. Mm-hmm. Huge.
And when you say $40,000 deduction on your tax return, sometimes that gets a little confusing if we're not dealing with it every day. Mm-hmm. That means instead of paying taxes on the 200, you'd pay taxes on 160. Yeah.
Yep. So that could be a big deal. This qualified business income deduction, though, again, hoops of fire. So you just need to make sure that you fully qualify. Ryan, you said that very diplomatically, that, you might have other income, you might have other things going on. We don't know what your business is. You might be in one of these sort of
service-based business.
Yeah. And so, but hopefully you can qualify for that full deduction there. So, and I also agree, don't understate the fact that the tax rates went down. The 10% still the 10%, but then instead of 15, it went to 12. Instead of 25, it went to 22. So you're saving 3 to 4% on that money just from the tax brackets as well.
And that's everybody, not just small businesses, but everybody gets that one.
Let's sneak the next question in here. Kristen's 35 from South Bend. My husband and I were told by our tax preparer to contribute to an IRA to help our taxes, but I'm a little nervous about investing right now. Should I hold off until things get better?
No. Thank you for your question, Kristen. That is a great question. And I go back to 2008, 2009, and people were looking, it was 2007, I believe, was the first year you could get the credit for putting a 529, the 5,000 and the 529. So we had people that had either put 5 or 10,000 into the 529 plan, and they were looking at their 2008 year-end statements, and their 5,000 had grown to 3,000, or their 10,000 had grown to 6,000, and they said, "Hey, this year as we're doing tax planning, we really don't want to do that because a 529 is a bad investment." Well, first of all, 529 is not an investment, but that is exactly when you want to contribute.
That's
when people get greedy, you should be fearful. When people get fearful, you should be greedy.
That's not a statement about what to expect in the short term. It's leading you on what to expect for the long term. And the other thing, Kristen, just being 35, I don't know anything else about your situation. You get a deduction for the IRA. So your tax preparer who's not doing financial planning, sure, they might say that's a great idea. It might be a terrible idea. You should probably consider a Roth as well, but you need comprehensive financial planning. So thanks for the question. That is all the time we have today. On behalf of special guest Ryan Fair, Kevin Korhorn, and myself, and all of us at KFG, have a great weekend. We'll see you next Saturday for Wise Money with Korhorn Financial Group.
Securities offered through Silver Oak Securities, member FINRA/SIPC. Advisory services offered through KFG Wealth Management, LLC. Doing business as Korhorn Financial Group. KFG Wealth Management, LLC and Silver Oak Securities Incorporated companies are unaffiliated.